Hey, hi everyone. Today we are talking about exiting a stock because all the YouTubers out there, all your friends, all your relatives talk about which stock to buy, when to buy, but nobody talks when to exit. So today we will discuss two technical strategies and two fundamental strategies that can help you make a decision if you should get out of that stock or not. So stay tuned if you're interested. And this video is just for long to short term investors. If you are an intraday trader, you better invest your time somewhere else. So let's dive in. The very first technical strategy that we'll be studying is the RSI divergence. So let's study it based on a company's graph. So if you see REC Limited, so here the price is in the upward motion. From July onwards, we see the price is moving up. But at the same time, if you see the RSI, that is making lower lows. So the price is making higher highs and the RSI is making lower lows. What does that signify? It signifies that the price is moving up, but the momentum has started losing it. So basically, the price is just going up because of small chunk of investors or small set of buyers. So it's just a matter of time before it start plummeting. The price cannot permanently keep on growing because the momentum is no longer present. So basically, if the RSI is making lower lows, but the price is making a higher high, that means that these two are diverging to each other, and this is a clear signal that you should get out of that stock or any kind of investment. So if you see here, if you basically just based on this time span, the price was bound to decline, and if you would have made like exited the stock around July time frame, which was the peak of the price, and the RSI was making lower lows, then you would have saved your money and the capital, because from 600 levels it went down to 400 levels. So almost a decline of 50% you could have avoided using this strategy, and this is applicable for daily and weekly charts and both for short term and long term trades. So basically, you see the price and you see the RSI, and if they are not exactly in sync with each other, the price is making higher highs, the RSI is making lower lows, then it's a clear sell signal and you should get out of that stock. Another example, PFC. So if you see the price is making higher highs, at the same time RSI is making lower lows. So the ideal exit time would have been around the July time frame, where if you have exited around the 550 mark and then the price went down to 390, so you could have avoided that, making a loss of 160 per stock. So basically, just observe the price movement, the price highs and the RSI, and if they are divergent in nature for a very long period of time, then you should get out of the stock, because that indicates that there are small number of buyers who are interested to buy that stock at that price level. There is no momentum underlying, so it will plummet sooner or later. The second strategy, death crossover. It's a very simple strategy but does wonders. So basically what we are trying to say here is, if you take two moving average of different time frames, here the ideal case scenario is 50 moving average and the 200 moving average. So 200 moving average serves as a base and the price should be above that. And then the 50 moving average becomes the more recent, but as soon as we see that the recent one, the 50 moving average, is crossing down the 200 moving average, that is a clear sell signal, because what it signifies is the recent trend is contradicting with the long term trend. So basically, it's an initiation or it's the onset of a downward trend. So if you see the graph of SBIN also, so during the February time frame, you will see a very beautiful death cross formation. So the 50 moving average crosses the 200 moving average, and from the price point of 770, it goes down to 675 almost. That is a 20% loss that you could have avoided. So basically, you look for moving averages, a longer one and a shorter one, and you see that if the shorter one is penetrating or crossing the longer one, then you should get out of that stock. These were the two technicals based on purely technical indicators. But there are other options also to understand, like if you should exit that stock. The very first fundamental way is the broken thesis. So basically what happens typically when we are getting into a stock, we study the fundamentals, shareholding pattern and whatnot about the particular company. And there is a particular reason, the main trigger point for us to buy that stock. that becomes the pillar of our investments, or the, let's say, the thesis of our investment. And if as soon as those theses are broken, then this is a clear indicator you should get out of that stock. And we will understand this by an example of Yes Bank. So the two pillars of, if I would have been making an investment in Yes Bank at the onset in 2018 timeframe, the very first pillar was the great management, or the charming management that we have Rana Kapoor. He was very a charismatic personality and whatnot. So that was the one pillar of my thesis. The other one would have been the good financials or the growth story behind the Yes Bank. So these were the two pillars when I was investing in Yes Bank back in 2018. Now in 2018 September, there is a news that Rana Kapoor has to step down from the post of CEO. RBI has asked him to step down from the role of CEO, and that was a pure red flag. That was like a breaking of the first pillar that we had. And it was just time that you exit that stock without any thought. So if you see here, if you exited that stock at around 350 levels, just when the news was out, then you could have avoided the drop down to just 19 price levels. So now if we see that in 2018, the CEO news came, that was like the breakdown of one pillar of the charismatic management. Then there was another news regarding the fraud in the NPAs reported, and that was around 2500 crores of difference was observed between the RBI analysis and the ones that were reported by the Yes Bank. So that was like another dent towards the financial aspect of the company. So that was like a breakdown of the second pillar also, the good financials piece. So this was just like high time you had to step out of the stock. So if you see here in 2019, from there onwards, the stock kept on plummeting, but there were a lot of people who were just holding that stock because they had hope that it will revive, and still it's trading at like almost level of 19 rupees. So this is complete erosion of wealth. So the bottom line here is, you enter a stock with a thesis, with some pillars of investment, and if those pillars are broken, if those theses are broken, you should get out of that stock, because hope is not a strategy in the stock market. If you're just hoping that it will come up, it will not, because if your thesis broken, the fundamentals are broken, the downward journey has started. So the moment you realize that, get out of that stock. The final would be valuation runaway, and this is something we are observing a lot lately because of these startup companies, Paytm, Nykaa, Zomato, and whatnot. And we will understand it better via the Nykaa IPO probably. So Nykaa was trading in April 22 at a P of 1700, a price earning multiple of 1700, which in no way can be comprehended. So it was just time that it had to be corrected. So if you see, that 1700 P was a clear indicator that you should exit that stock, and you could have avoided the losses that you would have made otherwise. So a P becomes a very straightforward indicator. You compare it with the industry, you compare it with the peers, and if it's significantly higher, don't enter a company with unrealistic PE ratio. That is price to earning ratio, because that is not justified. So overall, one thing I would say, that knowing when to enter is important, but knowing when to exit a stock is even more important. So you might be wondering that what about targets, what about stop loss? Yes, that is the absolute right strategy if you have a risk reward in place, or you have stop losses, trailing stop losses, and whatnot. But these strategies will help you make a decision for those stocks sitting in your portfolio forever, to which you are holding just because of some hope. So analyze your portfolio, and if any of these indicators is present for a particular stock in your portfolio, get out of it. It's big time, it's high time. And if you liked the video and it helped you cut down your losses, subscribe to the channel and share it with your friends who might need it. Thank you. Until next time.